Good evening, everyone. You got Kody Ashmore, Director of Weekly Option Strategies, obviously here at Simpler Trading. If you're watching this video on the Simpler Trading YouTube channel, first off, thanks for watching and hanging out with us at the Simpler Trading group. But what I want to talk to y'all about right now is a setup that I still think is pretty actionable as long as it doesn't cause a huge flush today, but it is something a little bit different. But it is basically selling premium and something that has extended parabolically to the upside. When premium, or when I say premium, I mean the implied volatility is elevated. And this is something that was done in the small account mentorship and also in the small account central room as Simpler Trading. But basically, let's talk about the first off the price action setup as to the why, like why do I feel this be a good spot to do it, and what is the results I'm expecting to unfold if this does happen. So in a nutshell, let's break it down by a few points here in a few different ways. So here is T-Mobile. It had a huge breakout, right? Nice consolidation, a nice solid squeeze, and boom. And this is the right here. This is the third ATR channel right here. And so, we're right outside of the 30 TR. So that's a good indication that price is getting extended. Now, and then we also have if you have studied price action at all, it's known as wick off or known as like a topping tail type of pattern up here. So basically, the way this is looking is this is telling me that price is potentially, I'm not expecting a huge flush and I don't need that to happen. And I'll show you the setup that we did here in a moment. And something, like I said, as long as it doesn't completely flush tomorrow, I think the setup's still valid and something that you could participate in as well if it is something you're interested in. But so price has rallied on up. I mean, weekly trend, nice consolidation, right? And boom. And I'm not expecting a huge trend reversal. But what if, after just like anything else, when price expands, it has to catch another breath, right? So price is up at 180 after a huge extension outside the third ATR. We are getting a little bit of a reversal signal right here with this up thrust from today's candle. And what exactly does this mean? We can talk about that too for a second. Well, this means basically at one time today, this entire candle was green and the buyers were in control. Well, the sellers stepped in and sold it back down and closed it below the open today. All right, cool. And another thing to acknowledge is, well, it's changed now since the close, but earlier at the time of entry, the implied volatility rank in the IV percentile, this was 65, at IV rank is 65, and then the IV percent was 85. And this was actually up here at 2.8, and you see it's dropping down to 2.6-ish. Right? You already see how it's past the line. I put a line here so I can monitor as it comes down as implied volatility decreases after this huge ramp up. And okay, I know this is kind of like all over the place, so let's take a step back. I think this will help it be better digestible and a better way to look at it. So from a technical pattern, we're outside the third ATR and we're getting a reversal pattern, right? So that's check. We have a price action set up here that we're watching. Now, how do I want to trade it? That's the other part to this puzzle. And with the IV rank at 65, and you see it's above, the blue line is historical volatility, so we're above historical volatility. So basically, what does this mean? This means the price of the calls are insanely elevated. And so what does that mean? If I'm at a spot where I think prices want to consolidate, I just want to sell that premium. So with the thought process and thesis that price is upside here, and I'm not looking for a pullback, just a consolidation, and look for implied volatility to decrease, how can we benefit from it? And that's what I want to show you here. So like I said, just quick recap, elevated outside the third ATR, price of the calls are elevated, the implied volatility is elevated with an IV rank of 62 or 65 at time of entry. And now let's talk about the options strategy that was employed. Now I did go 45 days out, got in for $1.25 a credit. So, and as price bounces around near this 80 level, right? So say it does start to consolidate, right? The implied volatility, the IV, is going to decrease. So if it starts to decrease, what does that mean? That means the costing average of your options are going to decrease. So that means you'll be able to close this at a profit because the options are decreasing value because we are short 3 180s. And you can see, and I did make it unbalanced call flight. That way, if it did completely flush, you can see I have no downside risk. So say whatever, and boom, it just falls apart. All right, cool. I'll just take the premium or the credit received. But if we can sit here and the IV decreases, then you can get out at a decent profit. For one position, error max risking, as it says right here, 135, 375. I'm not looking for a pin. I'm not holding this into July, so I'm not going to say max profit is 600. My goal here is to take about $1 or $2 out of this thing as the implied volatility decreases. And so where's my stop? So my profit target is to take about $1 or $2. I want to watch it as it unfolds. And you see my break even is all the way up here at 183.13. 183.13 is right outside of today's high. And so my stop is actually at today's high. Because why today's high? My stop is if it closes above today's high, that's telling me that the buyers from this candle are back in control anyways, and the setup is no longer valid at that point. So I'll go ahead and take a loss. So say it did come up, come all the way to here, it closes above my stop. All right, cool. For one position, a $75 loss. All right, cool. No big deal. But if it does bounce around here and stay contained within this zone and does not break this spot and potentially pull back a little bit, then I think the setup is going to be pretty solid. So just a quick recap, extended up into the 30 ATR. Premium is elevated from the ramp higher. Looking for a price to potentially consolidate around 180. And the trade is really just looking for the implied volatility to decrease, thus helping us benefit from the implied volatility that is increased. And if it does completely flush lower, just take the entire premium and get out of it. And the target is roughly about $1 or $2. But it has space to watch. But this something, like I mentioned, is something that is potentially actionable heading into tomorrow. So if there's something you're interested in, feel free to hop on and let me know in the comment section. If you decide to take it, let me know. I'm curious if anyone would actually take this kind of trade. And if you have any types of questions based on this trade strategy or setup, let me know as well. Have an awesome rest of y'all's night, everybody, and take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me